Hi, my name is Kerry Lynch. I'm the CEO of Power Nickel. Power Nickel is advancing the advanced exploration project Nisk in just south of James Bay in Quebec. So we'll sort of unpack you a little bit on Power Nickel today and why it's an interesting and exciting story to look at.
Terry, thank you for the introduction. Good to see you again. Today, we're not going to be talking so much about the geology and the kind of the resource potential of Nisk by itself, but I want to have a look at Power Nickel more from from two sides of things. It's a validation approach. So we're going to have a look at the shareholder register, incentives and options and all of that kind of stuff. And also I'd like to look at your take on your peer comparisons and where you want Power Nickel to get to in terms of its corporate progress and also the valuation steps. So sure. Let's get stuck into it. I think just as a kind of as a starting point, let's have a quick talk about the market. And you're doing a capital raise, and could you just tell me a bit about that process and where you've got to?
Yeah, so I guess it almost started really last March. You know, when we released the results of our 2022 drill program, and they were really good results. They sort of confirmed, that the historic 4311 was accurate, and we had a pretty interesting deposit to look at. At that point, the stock, then nickel, as we recall, was running, so it was a good market. Nickel's running, and then it's like stock sells off. Why does that happen? Well, it sells off in Canada because the shorts come in and they assume you're going to take a financing and they'll bang your stock down. So effectively, what happened at that point is, as a company, we thought, hey, that's not good. We deserve better. We called our warrants. We had some historic 15% warrants that were eligible to be called, and we called them. I had the biggest single package of those, and everyone wrote a check, and we
hang on. Are you sure that it was the shorts? I mean, because in around March and April, there was all of the base metal markets had a peak, and then there was the Ukraine war.
Yeah,
everything sold off. I mean, why do you put the finger on the shorts?
This was before that. So it was a couple of weeks before that for sure. And then of course that the war accelerated the fall off, obviously, and then it became more of a broad market correction that we absorbed and obviously didn't necessarily forecast coming. But our view on the shorts are that you can't tell by looking at the short reports because they don't really tell the story. They never do. We could spend a bunch of time on that. I don't want to necessarily go into it, but there's a whole we did save Canadian mining for this very reason, to show what a discrepancy there is as a result of that happening in the mining market. So I've got some pretty hard statistical evidence on that. But just continuing on with the story.
Sorry. Yeah. I don't want to leave this just immediately.
Okay.
Had you advertised that you were going to need to raise money straight after your MRE? I mean, were you particularly low on cash, and had you been low on cash for 2 or 3 quarters?
Yeah, I mean, it's pretty obvious to anybody that look at the balance sheet that we were basically needing to cash up in order to do another exploration program, and so we had assumed that with the good news that the stock would have made a move north, and then we could have financed conventionally in the market, some sort of discount to market, and then go from there. But then that just that didn't happen. We basically, as opposed to taking a financing from the shorts, we basically said no, we're going to call our warrants, which we did, and we said we'll push forward to the fall and hope for a better market in the fall when we start drilling again. And we said publicly at that point that if we market didn't respond, that we would look to do sort of almost like an internal round where we go to our existing shareholders, our bigger shareholders, and basically finance with them, with a view to being that if you're going to have to give it away, give it to the guys that brought you versus the guys who are trying to bring you down. So
we all know that the market isn't better now than it was in April.
Unfortunately, no. The market's probably not any better, certainly worse. However, and our view was that, hey, at some point, when we started, drilling in mid-September, we knew the clock was ticking, in terms of the financing. And obviously the market didn't respond necessarily to our drilling news, and market conditions got worse. So about 3 or 4 weeks ago, we announced that we would do a financing, and it was basically a sort of a two-step financing. One part, about 70% of it, was done at 20 cents with a 20-cent warrant, callable, and the other part was done at a 10-cent unit with a 20-cent warrant. And we'll end up closing that this Tuesday, so in 48 hours or so, for around $4 million thereabouts.
How does that work? Because surely the people who the 70% that comes in at 20 cents are going to be a bit cheesed off that there's 30% at 10 cents.
They get significant tax benefits that make it the same price effectively.
So that's the flow through.
Yeah.
Okay, so the
70% and what happens with the flow through in this case, it's a little bit different twist than a traditional flow through. So it's not going through a flow through fund, or like that in 4 months we'll all of a sudden get all this paper hitting our market. What we arranged was what's called a charitable deduction flow through. So the people that subscribed were high income tax earners in Quebec, which is obviously where we're drilling, and they buy for like one moment in time, and then the next moment in time they sell to effectively the long-term investors for the 10 cents. Okay, so what happens is the entire round is basically placed effectively at 10 cents, but the company got obviously closer to 16 cents on average or something like that. And that was all done when the stock was 10 cents when we announced it. So the stock is actually moved up with the financing, which is, is a bit unusual. But
as you'd hope that a stronger balance sheet is reflecting a stronger company. So how many shares are you likely to issue?
27 million shares.
27 million shares, and let me just see if I got my notes here. You've already got 100. Well, it depends if you're fully diluted, but
so about 92 or so right now. So you add the 27, so it's about 119.
Okay, so another 27 million warrants on top of that.
Yeah,
and just I'm not sure if the figure's up to date, but I've got existing 20 million warrants already and 7 million options.
Those warrants are not correct. There's only about I think there's only about 5 million warrants out now. They expired, yeah.
And
in our latest deck that I sent you, I think there should be. Let me just pull that up.
I think I probably got that from an older presentation or off the website somewhere. Anyway, and so those 5 million warrants. What's their strike price?
Average of 44 cents.
Okay, so they're out of the money at the moment, and so they might expire worthless, or they might get exercised.
Yeah, we're highly confident they're going to get exercised, but that's just us.
Okay, so let's if we could, can we just talk through your shareholder base?
Sure. So basically, the way to look at the base is the Lynch, Terry Lynch and the Lynch family own about 20%. Okay. The Stern family, which is my friend and mentor in many ways, who brought me into this deal 10 years ago. There's a whole joke about that. But anyway, he owns about 15%, he and his family. And then Critical Elements, who we acquired Nisk from, they own about, I think now 13% or so. And we've got our board owns about 4%.
Can we just go back to Critical Elements? Is that held in a private company? Is Critical Elements private or public?
No, Critical Elements is the really great lithium story in Quebec. That's probably going to be Canada's next lithium mine.
Okay. And then so they've got a flying market cap.
Yeah, they're about, I don't know, 400 million or so.
They've got $4 million. Hang on, would have $2 million worth invested in you, or less, $1.5 million.
Yeah, exactly. Yeah.
So
we acquired Nisk from them. That was on their balance sheet.
Okay, so they've got some stock of yours, which is non-core to them. Let's be as neutral as possible. It's non-core.
Yep.
And are they likely to sell? Do they follow their interest? Do they come into this capital raise?
They didn't. They would have if we had needed it, but they didn't. We didn't necessarily need that. They're just in the midst right now. They got their final permit just about a month ago, and they're in their final financing stage of over the next, they've publicly said over the next, I think by the end of Q1 they'll announce their financing plan for developing the mine. They've preserved their independence, so they're really in a great spot. They're it's hard rock lithium. It's very high-end project, quite interesting lithium mix, and so that they're in a good spot. They JS John Sebastian Lavallee, who's the CEO, he's a very sharp geologist, and he's a big believer in Nisk. So will they sell at some point in time? For sure, because they're an investor, but they know there's a mine in their mind likely to be developed here, and they're going to ride through the valuation on that. So okay. I wouldn't see them as a short-term trader of the stock. They haven't sold a share, and they've had a chance to sell stock, in the 30s and never did. So they're certainly not selling down here.
That's really useful color to know that the decision maker is a smart geologist, likes nickel, and is prepared to ride the value curve. Thank you. They've got their eye on the prize, if you know what I mean. They know that that a successful and evaluation of a commercial nickel sulphide is worth a lot more than $10 million.
Not a lot more, yeah.
Good. Okay, so Critical Elements 13%. Who was on 4%? Oh, the board.
Yep.
Board on 4%.
And then we've got a couple of Canadian hedge funds. The top 1-year hedge fund in Canada was Palace Capital. They own sort of in the 2-3% range, and invested in this round as well. And BT Global, which is the top 5-year hedge fund, I think, in Canada, and they owned about the same, and they participated in this round as well.
Which global?
BT Global.
BT Global. And their stake in the company is, sorry?
Sort of in the 2 to 3% range.
Okay. So 2 to 3% with Palace, 2 to 3% with BT Global. Did either of them take more than their just following their interests? Did they take kind of a slightly bigger chunk?
Yeah, I would think so. Let's think. Yeah, I think they both ended up taking more than their chunk. They took around 4% in this round. What's
their normal unit size? I mean, I
mean, this is very small for them, and honestly, and it's I have a sort of personal relationship with both of the fund managers. They sort of they've been participating. They participated in our previous financing prior to this one was at 25 cents and 40 cents. So this is a down round for everyone, and they had been shareholders prior to that, but came in this round as well.
When was the 25-cent one?
I want to say June of 21.
And the 40 cents?
Yeah, 25 and 40.
And when was the 40-cent raise?
It was like a hard inflow like this round.
Oh, okay.
Yeah.
Okay, so it was a combined package. And what was the weighting? Was it also 70-30 at the higher price?
It was actually no. It was almost the reverse. It was more like 70% hard and 30% flow. It just hasn't shook out at that point.
So the average price was probably closer to 30, 31, 32.
Yeah, I think so. Yeah.
Weighted average. The project's advanced quite a lot in the 15 months since our last capital raise.
Yes. Yeah. Commercially, it's been de-risked a lot.
So it's actually, if you liked it then, you're going to love it now. That's the kind of the philosophy.
That's our hope, and that's why we were able to get our existing guys to step up, because they obviously understood the theory behind what we were trying to do. They saw that we had executed and done what we said we were going to do. While the market hasn't rewarded us, I said, guys, look, obviously we can get money from the market. There wasn't any question of being able to finance. It was a question about who are we going to give this prize to? Do we give it to people we don't know, or do we give it to the people that brought us here? So I said, let's first offer to our existing, people, and as you should do in these things, I think. And if they want to participate and load up, then God bless. That's the way to do it. So that's what we did.
Yeah, great. Who's helped you with this? Who's your broker on this?
You know what? Research Capital was very helpful. We had some help from Raymond James and Lee Jones Gable.
So you went through three. Did you syndicate it to three?
So, but in fairness, of the $4 million, I don't have the final fee numbers, but probably I raised 75% of it myself.
Did they take a fee on that, or have you managed to put that as the president's list?
Yeah, so it's just about 25% of the offering will have fees, or 30% at the end of the day. So we paid 7 and 7 for the brokers on that, and but we basically almost, because it was an internal round. I mean, obviously, I'm not going to charge. We're not going to give anybody a fee on the Lynch family investment, surely.
No. Take a hike. Get out of here.
Or Sam Stearns or all these people that participated. So we were quite efficient from a expense point of view to try and do that, and we've been like that all the way along. And again, it's not that we're big believers in working with brokers and paying brokers, and they get paid well, obviously, when they do their job, but it's when you do something like this, obviously it's skinny for the company, so you want to keep it as you don't want to waste your money. You want to be putting that money in the ground.
Yeah, but still 7 and 7 is pretty healthy if they're contributing $1 million. They're making good coin.
No, it was good, and that was basically these were people that had helped us along the way. So when we went back and we said we're going to do this and turn around, even though they were existing shareholders, you have to show respect that, hey, you brought them in, so we're not going to cut you out for be predatory. We want your support along the way, and you have to show respect. So I think we showed a healthy amount of respect for that. That's sort of, I think, fairly common in the industry. Is you need to be respectful to the brokers, and we certainly were.
Good. Okay, and so hang on, that takes us up to I've lost my percentages now. So that's about 50%.
Yeah, maybe a bit more. I think if you think like 20, 15, 13, that's 48.
48.
And the
52.
board is 4, is 52, and then
so maybe 60%.
Closer to 60, yeah. So and then the rest is pretty widely held. Has been for this company's been around for 20 plus years, so I've been with it for 10. So they were so it's widely held after that, like several thousand shareholders. So there's a good core. I always like that we have like more than 50%, because that means from a especially if you get an asset you feel is really worth something, you want to make sure that you can get fair value for the asset. Well, as long as you've got 50%, you're gonna basically be able to say, hey, no, I'm not selling for that. They can't take you over because you're saying no, not high enough. So that's a good position to be in.
And also having a relatively chunky, let's call it a retail section of your shareholder register that helps for liquidity, presumably, and price solves any liquidity issues. How do you view your liquidity, and how do you reach that 50% of the shareholder base?
So we basically you try a number of different things. Obviously, you have a shareholder list, and you communicate with them, and we try to do that regularly. We're doing basically I think it's a monthly podcast now with our shareholder list and our list, and sometimes we'll do, like this last one we did about a week ago or so was sort of we went through the updated presentation just because it's been a while, and show people what where we're advancing on the drill program, when the, what holes are complete, when we think we think that the assays will start to come out probably as early as next week, and then they'll just for the next 2 or 3 months, these assays will be coming out every couple of weeks. So we try and communicate them, on the podcast, you're always looking for new ways to communicate with your shareholders, but we remain pretty open. If people contact us, in email, we will reach out to them, and we're fairly transparent. I think, one of the interesting things that we did as a company, we decided was we would publish all of our drilling data, core data, put it up there so people could model it themselves if they wanted to. I think, all too often we sort of, hide behind these secrecy things, but the reality is, what is somebody going to come in and scoop me in Nisk? I own the claims. It's not possible. Each ore body is completely different, and there's a lot of people that are quite capable of modeling deposits themselves and having their own perspective as to what we have or don't have. And junior mining has had a reputational problem over the years for trying to sort of portray bullshit, really. And well, how do you deal with that? Well, be transparent, show people what you got, and be committed to the transparency. And as it goes forward, we'll continue to do that. And I think that hopefully over time, people will start to realize this is, a really significant opportunity, and that will help in the valuation game.
I can think of a few names of companies right away that don't publish all of their data, and should, and I think that they're hiding structural complexity and kind of geometrical challenges in defining their ore body, and I think that's one of the reasons why they do that. But let's not get into naming names on this in this interview, otherwise I'll be a bit bitchy, and I don't want to go down that road just yet. Let's in your latest presentation, you've got a couple of peer comparisons. You've talked about you say that you're extremely undervalued compared to your peers, but I can't quite work it out. Maybe you could talk me through it.
Sure. So I don't know if you want to pull up that chart, but if it's possible. But
well, first of all, before I do that, can you tell me how you value yourself?
So,
do you think of yourself on an EV per pound basis or per ton?
Yeah, I think that a couple things. One, I think you have to compare yourself against people that are most like you. So we're a nickel sulphide deposit. That's what we're advancing towards exploration and hopefully towards becoming a commercial mine. And I like to compare ourselves to other nickel sulphide deposits, wherever they might be. And I think nickel sulphide deposits that have at least 1% nickel. Okay, so we're not comparing ourselves to the laterite projects or projects that are big bulk tonnage but low grade, because that's a different animal from our perspective. It requires much different capex expenditure. There's a whole different economic series of events that would have to happen for that to be commercial. I don't want to go down that rabbit hole. It's not us. We're not like Giga Metals or Kenner Nickel. Those are interesting projects, and hopefully in the fullness of time, those will all get developed. But they're a different animal, and I just don't see them as our peer group.
In the fullness of time and economic, a different economic scenario. To me, they don't really smack of being economic today, but let's see what happens. Yeah, maybe there's some miraculous technology that makes them work.
Yeah, but and who knows? I mean, I know that for example, Gig is looking at, is there going to be some carbon credits, with respect to their ore body and these types of things. I mean, there could be some interesting innovations there that could perhaps make those things more economic. I mean, So anyway, I remain hopeful for those projects, but it's not what we're at. So we're definitely. I look at us and say, hey, to put this mine in production is probably going to cost you $250 to $350 million. Okay, that's a much different animal price wise. The peer groups that we're looking at, the other nickel, I think you'll agree, Merlin, in mining, I say to people, you're a zero until you become a one. And the zero means you're an exploration play and you're very risky and probably not going to come of anything, because most exploration plays don't come of anything. And then at some point in time in the continuum of exploration play, you make enough discoveries and move the resource, in terms of quantity and grade along enough that the market says, starts to believe, hey, this guy's got it, or this company's got an increasing chance of being commercial, and at some point it's like, oh, I think they're going to be commercial, and then there's that band of projects that are not yet developed, but that are perceived to be commercial, and they have a different price point than all the other exploration plays. So we're right now, I would call it an undiscovered exploration play. But honestly, the bones of what we have and what we're bringing to the market, and as we continue to roll out our story and get out our assays, we're basically moving in that really special phase of investing, where we're going to go from being the 0 to being a 1, where we're going to say, hey, you know what, this thing is actually going to become a mine at some point in time in the near future. And
well, you've got to go through those. You've got to go through those de-risking steps. You've got to go through the famous Canadian modifying factors. So you take a lump of rock which has got a resource around it, and you actually you do the engineering. You understand the metallurgy. You understand the water flow. You understand the rock mechanics. You understand the infrastructure requirements, and you apply these modifying factors, and you de-risk the economic proposition, and that is how you grow your value. And so this, well, just remind me what your resource is.
So the historic resource is 3.1 million tons, and
at what grade?
At about 1.5% nickel EQ at about 1.5, 1.6. If you use $8 nickel at $3 copper. About 1% nickel, and the rest is sort of copper, cobalt, and palladium.
Okay. Your new resource is coming out when?
So the metallurgy is being done now, and it will be complete sort of in about 4 months. It takes a long time to do metallurgy properly. So we'll expect to get the new resource updated, including all of our drilling that we're drilling up until Christmas. So there'll be about 10,000 meters of drilling added to this resource. And we'll expect to get that out sort of in late March, early, sometime in March, April of
Q2.
Call it Q2. Yeah, call it Q2.
Q2 23.
Yeah.
Okay,
yeah.
and then are you going to wrap some economics around it?
Yeah, there'll be some economics that'll be built into the resource for sure.
I interrupted you. Just about to say your expectation is.
Our expectation is that updated resource will more than double the existing thing, and perhaps triple. So we think that it'll showcase enough that people will be able to look at it and say, this thing is going to be commercial. Because I would say that the earliest you could do a commercial mine of this nature would be, there's been some done at 8 million tons, but most would be 10 million tons and beyond. And obviously, the more tonnage you have, the better. But in this market in North America, that would definitely get you. If that's all you had, you would still probably get developed. We think there's a lot more than that here, but that would be the start.
I would have thought that a 1% nickel sulphide or 1.5% nickel equivalent would get developed on less than 10 million tons. Is that what you see as a kind of an economic threshold, really?
I think 8 is sort of
8 million
that's
tons,
what when we did our research, that's the smallest one I found developed. Maybe there's some we've missed. But,
okay, and you feel as if you're in quite a good shout of getting close to that.
We do, yeah.
Okay, so that's what you mean by the going from the 0 to the 1, is that you think that the 8 million ton threshold, that the exploration work that you're going to do is going to take you to that kind of commercial probability, or that commercial reality.
Yeah, that's what we think.
And you in this PEA table here. I mean, let's pull it up now. Let's pull it up now. We can actually talk it through. Are you going to do it, or shall I? Okay. So just pick that up again. 3, 2, 1. So Tony, sorry, say that again. 3, 2, 1. Terry, I've got the PEA comparison up here. And you're saying that you think that Nisk has got the potential to hit that economic threshold of around 8 million tons. And so we've got some. Talk me through these.
Yeah. I mean, obviously, each ore body is different, and it's nothing's a complete one-to-one comparison. But I would say these are the mines that are likely to be developed, and the market perceives them as likely to be developed given the market caps, over the next couple of years. And they range in sort of, I guess, market value. And we did this. This might be a week old or 10 days old. I can't recall, something in that order of magnitude. But it's basically, sort of like from 150 million US to about, 500 million US. That's sort of, what these mines are looking like in terms of valuation. They range in, from 3 million tons up to, I guess, premium's got 16. Each one has got its own unique story, and you'd have to, as you know, we'll dig into each ore body to understand it fully. But
sure.
But this gives you a feel for what the market is saying commercial nickel mines in development are worth. And obviously there's less and more. And like if you look at Tamarack as an example, which is Talon Metals project, and it's a great one in Minnesota. That's really their interest. Their interest is 60%, right? The actual deposit should be, in my mind, on this scale, should be the deposit is divide 271 by 0.6.
0.6.
Yeah.
Takes it close to 400 million.
Yeah.
A couple of things. Can you just run through these project by project? Tell me what stage they're at.
Noront is that Wyloo bought it, right? So they were quite advanced in terms of the technical work. So that now I don't know if they're doing a new feasibility there or what Wyloo is doing. I've sort of lost track of that since they acquired it about almost a year ago now or so.
And that was at feasibility stage. It hadn't started construction. It wasn't financed.
Yeah.
It was, they published a feasibility study and then it got taken out.
Yeah, I think so. I think that was where they were at. Talon is at the PEA stage.
Okay.
So
not that far more advanced than you guys.
They're certainly advanced, but they're not like light years ahead. They're
not years ahead. I mean, maybe a year ahead.
Maybe a year ahead. Yeah.
But they've got a bigger tonnage, and they've got a slightly higher nickel grade and a slightly higher copper grade.
Yeah. And smaller cobalt and very little palladium. So different things, but for sure it's an attractive project. It's a deeper project. So we're shallower, they're deeper. They have some. Again, I think it's interesting. I don't know. They just got a grant from the U.S. Defense for over $100 million to advance this thing to completion, but in an interesting way. They're not going to mine the ore. They're going to mine the ore in Minnesota, and they're going to ship it to, I believe, South Dakota for milling, which is something we've never seen before. I don't think in the nickel business. But it deals with the sensitivities in Minnesota with this. This is around a very sensitive water area, like a marshy sort of water zone, and so this was an approach. And again, this is not guaranteed this is going to happen. This is theoretically what they have engineered as the solution to it. So there's that. So each of these mines has got their own, Mincor's mine is early days, but obviously a phenomenal nickel strike, of 4%. And if they get more of that, then obviously that'll be a Hollywood type of shot. So that's why they're trading at such a lofty price point for relatively, new story. So you can start to sense that again, once they, when I look at us and say, hey, when you put us up there, maybe we probably should have put ourselves on the same table, is that we're at I think we'll probably get into that 7-8 million tons, 9 million tons, something like that in just a few months, and be at 1% nickel or maybe slightly better, 0.5% copper, 0.07 cobalt, 1 plus grams of palladium. So it's a pretty comparable grade, maybe a little bit less, but certainly healthy, and it that becomes a very interesting. We're at $10 million US. So
and you've got another peer comparison here.
When people ask us about our other assets, I say to them, very clearly, I say, before we bought Nisk, we were trading sort of, at like around, because the market was a little bit healthier then, maybe twice this value for the value of our copper gold assets, which are, in BC and in Chile, and I sort of give some examples of other companies that are just immediately north and south of us in BC. So I say to people, you should buy Nisk or buy Power Nickel because you believe in the nickel story. If you don't believe in the nickel story, then move along and find some story you believe in. However, that being said, you are going to get a bonus, and the bonus is we've got some very valuable assets in the copper gold space, and we're going to harvest them over time, and that'll be a nice kicker for you that will sort of support your investment thesis. And that's sort of that's in my mind as an investor how I would approach it, and how I when I talk to investors, I say this is how you should approach this kicker. That it'll be there, and it could be material, but you got to believe the nickel story if you want to invest, really, because if you don't believe the primary story, you don't invest in these deals if you don't believe the primary story. At least I don't.
And so basically what you're saying is that you in Power Nickel you can invest for your copper and gold assets in terms of the valuation blocks. Your valuation is that the copper and gold assets, from what I can see from this slide, is you're saying that they are worth the market capitalization of the company, and therefore you get Nisk and the entire nickel story, the entire thesis, in for free. That's
exactly the story. Yeah.
So, I mean, that's quite funny, actually. But I mean, it's tragic, but funny.
Well, I wish we're the only guy like that out there. But there are samples of that. I'm sure you're aware of them yourselves. There's some, and like I think people are starting to wake up. Because the contagion in the main market is making people fearful. But people are also losing money by keeping their money in the bank, and they need to be somewhere where there's going to be growth without like ridiculous downside. And I would have to say, like if you look at what's the downside in Power Nickel at 10 in the US with all these assets, I mean, my God, it's unreal. So yeah. So there's not a lot of downside, but there's a whole lot of upside, and it's like it's happening. We're executing, and like I said to people, it's time to get off your wallet. Like, wake up. It is definitely time to buy Power Nickel, in my view, and we've shown it by writing big checks because we believe.
Tell me what the monetization plan is for your copper gold assets in BC.
Yeah, so we're going down two pathways there. We're going down the pathway of potentially spinning out a sub that would contain, the assets, the one in BC and the ones in Chile, into like a copper gold play, and we would sort of move that forward on that basis, do some advance those. Those are really Nisk was advanced exploration. These are more exploration stage. There's been some work, some amount of money in Chile. Quite a lot of money has been spent, but still more has to be spent. Still exploration. There's not a resource. So that's one pathway forward. The second pathway is we're also talking about M&A transactions with peers in the area in Chile and in the Golden Triangle, where we would swap our assets for a reconfigured play in these areas, where we would become a big stockholder in these other entities. So we're open to doing those types of moves. We're not looking necessarily to sell the thing for cash. That's not where you're going to get value today. You definitely still have to bet on the horse, and we believe in these. The exploration potential in both these plays is significant, but it needs capital and a focus. So we think that exploration market, which is non-existent the last couple of years, is going to probably have a shot at coming back next spring. We think that the precious metals and copper could have a rebound in the exploration side of things, and we look to play that through a transaction, either through a spin-out or through an M&A trade.
Okay, got it. So it's kind of embedded value. It's long-term embedded value that helps de-risk an investment in Power Nickel, but when that's going to play out 2023, 2024, possibly beyond. Good. Let's get back to Nisk, and you've got the new resource coming out in Q2. What's the timeline before you get a PEA together?
Yeah, so we're already working on we're thinking H2 when we get a PEA. That metallurgical work will be part of it, which is what we're commissioned now to be part of the 4311, but it can be part of the PEA as well. We think we'll be a bit further enough advanced to be able to generate some economics there. So that would be something we'd look to get out. Probably Q4 of 2023.
Good, thank you. I think it's been a really interesting analysis of Power Nickel from a different perspective, not just talking about kind of drill bits and rocks and that sort of thing. It's been really interesting getting to understand how you think about the kind of the value growth for Power Nickel in the year ahead. Do you ever think about it on an EV per pound basis?
Yeah, we actually did the math on that, and the BC Securities Commission said you got to take that down because, and I guess in their defense, there's so many parameters behind each mine, and there has to be as people, we try to simplify things, get it down to EV per nickel pound of the ground, but there's a whole lot of other factors that factor into it, and from a legal perspective, it became a bit of a quagmire. So we had to pull that. We actually have done that work, and we believe in it, as a good guide. With everything in this space, is it just a guide? We're not Nostradamus here. We can't predict the future. We don't know exactly what might be around the corner in any drill bit hole. So, but it was a good guide, and our rule of thumb, we did the math. We were getting paid 10 cents a pound of nickel in the ground, and Talon Metals is getting $1.20 for the same nickel. So it's like, yeah, they're worth more. They're farther advanced. They definitely should get some premium, but 12 times for the same pound of nickel. I'm not saying they should be 12
times or 2 times.
12 times.
Oh, they're getting 12 times more value than you are.
Yeah, and I'm not saying that they. And I think they're actually cheap. I just think that we're super cheap. But when you compare it that way, but it's that whole thing about if the market perceives you as being that this nickel will never see production, it's not. It's lucky you're getting 10 cents. It's basically if it's not going to get into production, it's got no hope of getting production. Yeah. So you either have to have the ability to get to production, and once you show that, then the market will respond. And I think that the clues, what I'm saying to the investors, I'm saying, look, watch our assay results. We've already showed last year what we delivered that was in line with the historic resource, and obviously, and we expect that it will be this next set of assays that'll come over the next 2 or 3 months. If those assays are 1.5% nickel EQ or better, thumbs up, man. That means this thing is going to come in like we talked about. So it's like, take clues from our assays, because that's going to reveal the truth, and then that will help you understand this thing is going to make it to the commercial status, and there's going to be a big win here. So it's like, but that's the clues you would look for as an investor to say, I want to see that this is happening, and once I see that's happening, at some point I may decide to make my bet. Yeah,
good. Absolutely. You've got to keep feeding the market with information so they can see whether it's on track. It's on track. I like the fact that your assay data is transparent. That really helps. It shows that you've got the confidence that you're not trying to hide anything. So that's good. Terry, thank you very much. I look forward to catching and speaking to you. Perhaps it'd be really useful to go through or have another session once you've published your resource. I think that'd be a good time.
Yeah, for sure. Yeah, it'd be great. Yeah, we're going to be. I guess we're going to be in London in about 2 weeks, and I think we're supposed to catch up with with the crew and have another. I think we're thinking by then we'll have some of the assays out, so we'll actually have something exciting to talk about. We hope. So
okay, well maybe I'll speak to you then because I'm going to be in London as well. So
oh, cool.
Hopefully catch you soon.
Sounds good. Cheers for now. Great, Merlin. Have a great day.